So April 15th is coming up, and you have figured out that you're probably going to owe the IRS, or you are going to owe the IRS this year. You're going to owe them a balance, and you can't afford to pay them right now. You might be tempted to just not file that return from now. Think the IRS is, you know, they won't find me for a while. I'll be in a better place. Well, that would be a huge mistake. And in this video, I'm going to explain why you need to file on time even if you can't pay. This is actually one of my favorite topics. Why? Because it's really simple to understand, it's easy to do, and by following it, you could end up saving 25% of the balance you owe the IRS if you follow it versus you not follow it. So I'm Bob Jablonski. I am a certified tax resolution specialist and an enrolled agent. I help taxpayers nationwide who deal with IRS problems. And I am going to talk today about why you need to file that return, even if you can't afford to pay it. So there's two main penalties that occur when you file a tax return, or can occur if you owe the government and you can't pay it when you file the tax return. Penalty one is that late payment penalty. And that late payment penalty is 0.5% a month. And it can maximize at 25%. So over 4 years and 2 months, you may owe an additional 25%. That 0.5% a month is actually knocked down to 0.25% per month if you get into a payment plan. The other penalty, which a lot of people don't worry about as much, but they should be worried about more, is the failure to file penalty. So this occurs when you don't file the tax return by the April 15th deadline, or if you get an extension, you don't file that return until by the October 15th deadline. And this penalty is actually 5% per month. So think about it. This penalty is 5% per month. So 5 months later, you now owe 25% more. Think about that. Most people think it's the IRS considers it far worse to not pay your taxes. But in reality, through that penalty, it's telling you the government considers it much more of a problem when you don't file taxes. So keep that in mind. So let me give you a real example. Let's say somebody owes $20,000, substantial amount of money, right? Their late payment penalty, even if they're not in a payment plan, is going to be 0.5% a month. And so $20,000, if they didn't pay for 5 months, let's say, that 5 months we talked about where it maximizes out for a late filing penalty, they would owe an additional $500. Now let's go to a late filing penalty. That's the 5% per month. And what will happen 5 months later is they will owe an extra $5,000. So it was $500 after 5 months for the late payment penalty. It's $5,000 for the late filing penalty. So obviously from this, filing timely saves you from that larger penalty. So what do you do if you can't file by April 15th? Well, you should file the return. You need to find a way to file the return. And if not, you need to file an extension. And keep in mind that an extension is an extension of time to file, not extension of time to pay. So you still may have a late payment penalty. Even if you file by extension due date, you didn't get an extension of time to pay the tax. But that doesn't matter whether you file the extension or not. Your taxes are due on April 15th. So you would be incurring that late payment penalty. So let's talk about some things that are going to happen to you if you don't file at all. Well, first of all, like we talked about, you're going to get that late filing penalty. You're going to get a 25%. And if the IRS finds out 3 years later, 2 years later, 5 years later, you're still going to get that 25% late filing penalty. So you're not going to avoid it by waiting it out. The IRS can also file what they call a substitute for return, an SFR, and they're going to be filing a return on your behalf. The IRS is only going to put the minimum amount. What they know about is the income. They don't know about your expenses. They can't vouch that your children qualify. They don't know what you have to itemize or whether you itemize or not. So you're going to get the worst possible solution if they file substitute for return for you. Now, you can deal with that, but it just creates extra hassles to it. And it's just not necessary, right? You need to file on time. There's also, the IRS only has 10 years to collect the tax debt, but that 10 years hasn't started. You haven't avoided that 10-year collection statute or let it progress along the line. It doesn't start until the return's filed either by you or the IRS, and the taxes assessed. And it's possible you can actually lose refunds if you wait too long. For example, you only have 3 years to request a refund. So if it's 5 years later, you figure out, hey, it's time to file a return, you can owe the IRS, but you can't get a refund. So keep all of those things in mind. Also, keep in mind that you can't get into a payment plan if you haven't filed all your returns. You can't file an offer in compromise. So if you find you're going to owe the IRS and can't afford to pay, you need to file that return even if you can't pay, and then explore what is the best solution for you to deal with your IRS problem. If you need help, you need professional help, I will leave my booking link in the description below. Click the link and we'll reach out to you and set up a time to sit down and talk about your IRS problem. Um, Take a moment, if you have it, to like the video so others can watch it. Subscribe to the channel if you need help with your IRS problem and you want to learn more. And leave a comment in the section below. I follow the comment section and I do my very best to respond to every single comment.